Good morning everybody, welcome back to cilinixfxcapital. Hope you're all doing great and welcome to this new video here on Cardano. We're covering it again. I covered this on Wednesday, I think, after a lot of requests for it, and since then, in general, I also tried that before, but I'm keeping it in my standard rotation of analysis, right? I mean, there's certain coins I always try to analyze, such as Sui, Solana, XRP. I'm adding Cardano to that because I know a lot of you are interested in that, so that's what we are going to do. And Cardano's price action since then has been great as well. The last time I covered Cardano, like I said, either on Tuesday or Wednesday, the main thing we said, and this is a very messy chart, by the way, my apologies. It does make sense, but I'll delete some things here which matter a little bit less. To make it a little bit more, to make it a bit more followable, I guess. Yeah, I think so. I think this is better. But what we talked about last video is when the price dropped down here, is that we needed to reclaim this level right here with quite a lot of strength. If we wanted to get back up to 74, 75 and potentially also 78, 79. So first of all, my price targets were much too conservative. I mean, in the end, the idea was right? Because we talked about the potential of moving, of reclaiming this area right here and then rallying up to new highs compared to the highs we made right here. So that general idea was correct. However, I did not expect the strength in the markets that we had at the second part of last week. So what that has meant for Cardano is that we hit this major key level right here, which you can also see historically, right? I mean, it's the level around 82 and 80 cents. There you have a 0.5 FIB. It's the value area high of the price action since the beginning of February. This is also the main level that provided support after the crypto reserve headline, and you can see in general it's a very respected level, but basically going all the way back to November. So this is the level we want to break above if we want to get back into this area right here, which is obviously what we want, right? We want to get into this area right here so that we can get a move back into 1.05 and 1.1. So that's the main question we have to answer is, you know, first of all, can we get into that level? I think the answer is yes. If you go to the higher time frames here for altcoins, so if we're looking at others has broken out here. And, you know, even though a pullback, definitely possible, it looks like this is going to stay bullish, at least for now, so that's great news. Also for Cardano, however, if we zoom in a bit here for Cardano, and I'm going through this very quickly, so my apologies if it's a little bit hard to follow, but in my experience, that's the best way to cover it, because then, you know, then I don't take up too much of your beautiful Sunday. But if we zoom in here, look, this level right here at 82.5 cents is a very strong key level. It takes some momentum to break through that. And so far it looks like a bit of a fake out. All right, you can see that the price actually, after the highs we made on Friday with a huge amount of volume, price made higher highs. But if you take a look at the volume made lower highs. If you take a look at the RSI made equal highs, maybe a little bit lower. So yes, I mean, open interest went up, but that just means more leverage is in the price, right? So given those divergences, in combination with the general strength of that level, I'd have to say it's most likely we are going to pull back here. Now, for me, the most important level we're watching is a very big, first of all, 75 cents. 75 cents, we have a huge amount of very strong confluences. Get a strong reaction there, and we can easily break above 82.5 cents, right? So if we get a spike into that level at 75 cents, followed by a move into 78 and 80 cents, it's very likely we'll do something like this. Right, but for me, structurally, the entire area that Cardano can hold as support to still be bullish, and for me to still think that we're going to break above 82, 83 cents, this is this entire level between 75 and 71 cents, where we have the POC, the point of control of the entire price action since February. So for now, I'd say it's most likely we are going to drop down into that. And then depending on the reaction to that level, we will either be able to break above 83 cents very, very quickly, or we have to consolidate for some time down here before breaking above that later. Because breaking above that, I don't expect it on the short term. I think it's a possibility in the midterm, but short term, I expect that pullback. I think it's most likely we're going to find we're going to consolidate a bit down here. Right, and then afterwards, later on, we'll be able to break out. But I will still keep you updated on that. For now, I'd say that's most likely, so hopefully that helps. But take care. I'll see you on my next videos, and bye.